Welcome Investorholics and all those newbies checking out the channel for the first time. This is the ETF Spotlight review. Today we'll be looking at VACF, which is the Vanguard Australian Corporate Fixed Interest Index ETF. Hang around if you're looking for fixed interest. This is an interesting one to take a look at. If you're an investor seeking exposure to a diversified portfolio of Australian corporate fixed interest securities, this might be of interest. This ETF provides investors with a low cost diversified exposure to Australian corporate bonds. Peace. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, let's dive on in. Investment objective: the Vanguard Australian Corporate Fixed Interest Index ETF seeks to track the returns of the Bloomberg AusBond Credit plus 1 year or 0 years index before considering fees, expenses and taxes and all the rest of it. The fund invests in investment grade bonds issued by corporations including Australia's 4 largest banks, offshore banks, other lending institutions and property trusts. The benchmark has a shorter duration than the broader composite index, but a lower overall credit quality, so BB minus or higher, as rated by Standard & Poor's, and therefore a higher expected yield. The Y factor, as always, we're always going to look at the Y factor. So you're looking at competitive long-term performance. Vanguard's investment approach provides investors with an efficient way to capture long-term market performance. Diversification, as with all ETFs, the fund invests in a diversified portfolio of securities, which means the fund is less exposed to the performance fluctuations of individual securities. When we're using ETFs, we should be looking for low-cost investment options. The fund has low ongoing fees as Vanguard tries to minimize the cost of managing and operating its funds. So that's one reason why we like Vanguard. Always trying to keep the costs down because they're effectively it's like a not-for-profit, I should say. Get me tongue untwisted. Okay, so we're looking at a net asset value of 53.28, trading just above that at 53.35, market cap of $347 million. Management fees very, very reasonable at 0.26%. You get a distribution on a quarterly basis in January, April, July and October. Dividend yield is roughly 3.3% at the moment. So VACF sticks to relatively high quality credit across corporate bonds, semi-government, supranationals and securitised debt. VACF would be suitable to use as a hedge against downside movement in the general market. After the most recent market crash, the current price possibly represents a great opportunity to build a position for the long term, although the share price is going up a little bit. If you have a look at the graph. If you're an investor building a balanced portfolio, this ETF could be a very useful way to access fixed interest income, or use that as your fixed interest component. But having said that, there may be better alternatives in the market. So that's why we always need to do our research. So have a look at GGOV, also have a look at VEIF, and also VBND. That might be an interesting little alternative to investigate. So jump over here so we can see all the different banks and institutions that hold some notes, or the ETF hold their notes anyway. So you're looking at Westpac, National Australia Bank, ANZ, Bank of Netherlands, CBA, Verizon, which is telecommunications in the States, and also Apple, plus I think there's 300 different fixed interest securities held in this ETF. So you're not looking at massive performance. We're looking at about just over 4% per annum per year. I mean, if you're in a product like this, you're really looking for the income, not necessarily capital appreciation. So keep that in mind if you're investigating these type of products. Like as I was saying, there might be better products in the market than this one, but definitely have a closer look if you're looking for fixed interest. It could be a good option for you. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.